Most buyers ask one question: how do I get the cheapest price per square foot? But experienced investors ask a different one: why is this priced higher? And is it actually worth it? But sometimes paying more is not a mistake. It can be the smarter decision. In Dubai, price per square foot is often treated as the ultimate metric. Cheaper equals better, more expensive equals overpriced, but price alone does not determine value. What actually matters is what you are actually buying for that particular price. When a property is priced higher per square foot, one of two things is happening. Either there's a real structural reason for that premium, or you are paying for branding, narrative, and marketing. My job and my client's job is to know the difference. First, supply. If the supply is structurally limited, waterfront, beachfront, golf front, or truly irreplaceable land, then pricing power is real. Now then add the demand. If the demand is deep, international and diversified, then a higher price per square foot is not expensive, it's rational. You are paying for scarcity. That can still be a good buy. Second, where the area sits in the city's evolution. Is this already a mature location, or is it still transitioning into a core district? If infrastructure, accessibility, or lifestyle positioning is still improving, then today's premium may actually be tomorrow's discount. That is re-rating. That is how long-term investors win. Third, what are you actually buying physically? Not all buildings age the same. Higher construction quality, better layouts, higher ceilings, superior materials, and long-term design relevance all affect rental demand, resale liquidity, and long-term durability of value. If the quality is materially higher, a higher price per square foot is justified. And an example that I'll give is maybe you're comparing a particular location side by side. One community has an 18-hole golf course where the other one doesn't, but the price per square foot in the one with the golf course is higher. That makes sense. That's justified. Fourth, differentiation. Does the asset offer something others cannot? Integrated lifestyle amenities, smart home systems, sustainability, wellness design, or a unique user experience? If those features increase demand and reduce substitutionally, then price per square foot becomes less important than positioning. Here is a test I would use. Once again, from the previous video, if I remove the branding, marketing, and sales narrative, and I only look at scarcity, demand, quality, and exit liquidity, does the premium still make sense? If yes, it is value. If not, it is hype embedded into the price. Yes, it can be great for short-term flips or short-term opportunities if you time the market correctly, but then we're just going based upon luck. But if we're looking at the fundamentals, that's a different story. If we're trying to build wealth long-term, that's a different story. Why does it matter? Buying the cheapest unit in a market often means we're buying the most replaceable product. That may feel safe, but it usually delivers weaker growth, lower demand, and harder exits. Sometimes paying more today means owning the asset everyone will want tomorrow or want to rent tomorrow. That's not emotional buying. That is strategic capital allocation. I'll give you an example. The price per square foot for a particular 2-bedroom apartment may be lower than another 2-bedroom apartment with a different layout. So let's say we go for the cheaper option. When it comes time to rent, maybe the one with a butterfly layout is more in demand, or people want to stay in that one more than the other one. And that will then determine how quickly it will take to rent that asset out, or how much we'll get for that asset. Now, the discount that we had initially, we may make more money from the rental of the other one, and over time we realize that the one with a butterfly layout made us more money long term. These are the metrics that we're using for a particular reason. Price per square foot does not make you money. Positioning does. If you want to build a portfolio, not just buy property, you need to understand why something is expensive and whether that premium is actually working for you.